We have seen choppiness continue while there is more bad news coming in from the Eurozone in sense of Spain, but also it's the FOMC meeting announcement expected tomorrow, which is giving some support, especially for the gold prices. That one is trading firm for an 8th straight day. Can't say the same about the industrial commodities though, because you have seen the crude prices decline for 3 days now, and copper prices, which did go to 3-week highs, also have given up those kind of gains. Markets, of course, will be looking out for the US housing starts data today in the evening and further cues coming in from Eurozone and FOMC. Let's get in then. Kunal Shah, he's head of research, Nirmal Bang Commodities, and he joins us in the studios. Kunal, hi, welcome to the show. Let's start with the gainers. The precious metals have seen strength, but do you think they have it in them to go further on from here?
Yes, at least for a day or two, until and unless we have a concrete outcome coming from FOMC meet. I think the bias would be on the upside because a lot of expectation have built that some positive speech from FOMC meet should lend support to gold. Apart from that, the EU crisis has seen worsening, and the way the fiat currencies are losing its value, I think gold should gain, and we are expecting an upside in gold. So one can go long in gold for the upside target of 30,500 on domestic basis, provided the rupee is still weak, so that should also add support to the gold prices in domestic market. So the bias is definitely towards upwards.
Kunal, how much are you reading into the FOMC? Do you think there could be a hint coming in, or they would talk about a further stimulus coming in to boost growth?
Well, I'm not expecting QE3 to come in at least next couple of months. So even I won't be surprised even it doesn't come at all going forward in next 6 months. So I'm not banking a lot on QE3. The fact is that the central bankers are realizing and have realized that all these QEs are not actually resulting into a good growth in the global economy. The impact of all these QEs are not, they are fading away very fast. So I don't think so any QE is going to come, and that's the reason why I'm saying that immediately one should not positionally go long in gold, but definitely for a day or two, I think the euphoria of QE can support gold.
Kunal, also, how have you seen the crude oil prices? Because we've seen selling coming in on for all the rallies. The Spain loans have been rising. If you look at the yields, those are also on the higher side. So with those kind of concerns coming in from the Eurozone, would you say that there could be further downside coming there?
First of all, if you keep European crisis aside and you look at the fundamentals of oil, it's becoming very terrible picture because the US oil production is moving up. The sites where the shale oil production is moving up is increasing every day. 2 years back, 2 years down the line, we had 7,000 sites which was actually getting fractured. Now there are more than 14,000 sites, and this number of rig counts for shale oil and shale gas is rising rapidly. In fact, shale oil is rising rapidly. So US oil production is likely to advance by at least 6 lakh barrels going forward in next 2 quarters, and I think there's going to be more problem for oil than any rosy side. I'm expecting oil prices are going to breach $80, and I think they are going to trade somewhere around $75 for the WTI and somewhere 85 to 86 for Brent.
Kunal, how soon do you see that happening? Because gradually we've seen continuous decline coming in for crude prices. Would you say that this week, this month actually could put in some more losses?
Yes, this month also can put on losses. If you look from the 6 months point of view, and you have to consider a view on other asset class, considering the outlook of oil, I'll say 6 months down the line, oil will be somewhere around 75 for WTI. I'm damn sure about it. And as far as the Brent is concerned, I see Brent at 85 because the supply side is getting stronger and stronger. So when you put EU crisis along with this supply glut in the oil market, I think it's posing horrible scenario for oil prices.
How would you look at the natural gas prices? Because they seem to be finding some support on the lower side. So would you say as crude oil prices go down, natural gas actually seems to be getting some support?
Interestingly, what has happened in US that after a sharp fall in gas prices, all the shale gas players have shifted to shale oil, and that's the only reason why you see gas prices gradually moving up. So if you remove the data and you see the average rig counts, which used to be around 850 to 750 since last 2 years, now that has declined by more than 150 to 200. So this is the shift of a play from shale gas to shale oil, and that should support gas prices. I see gas on Indian basis may test 160 rupees, and as far as NYMEX is concerned, I'm expecting it to test around 2.80, 2.85 going forward.
18.5% of a rise in last 7 days. That's quite a bit coming in for the natural gas MCX prices. Nearly 3% of gains coming in today as well. Kunal, how about the base metal sector? Because China, while has been high on rhetoric, we haven't really seen demand improve so much. I mean, even as they are stocking, the demand really is not coming in there. How much of a pressure do you think that can put?
In near term, we may not see the sharp fall in the prices of industrial metals such as copper because of the positive data what we got from Chinese custom, and also matter of fact is that we have seen an interest rate cut in China. So the things have stabilized, the fears of hard landing have subsided. That should lead to some rally in prices of copper. But I don't see copper again moving above 430. So the maximum upside I see on Indian bourses is still 423, 425. For the change, we have given a long strategy on copper, and we are expecting copper to test the levels of 423, 425 maximum. Again, I still maintain my view. By the end of this year, copper prices are likely to breach $7,000 on LME.
On the lower side, that is. Also, Kunal, how do you look at metals like aluminum and nickel? Because both these have been on the lower side. Aluminum especially trading near its cost of production. Nickel, of course, has seen a bit of stories coming in about another alternate as well. How would you look at both of them?
Both the metals where you recommend on which you are talking about has a lot of value. Aluminum, I think we've seen 10% production cuts in China. We've seen production cuts in Russia. We have seen production cuts in United States. So all the major producers are slashing their output, and I think that itself is a very positive as far as the commodity like aluminum is concerned. I think one should go long in this commodity and expect prices to move at least up by 4 to 5% going forward in next 1.5 months.
What do you expect from the G20? That's another event that's coming into the markets. It, of course, is a very newsy event, full week. Would you look at FOMC, or do you think some surprise could come in from G20 as well?
I mean, I don't think so. G20 can comfortably solve the EU crisis. I mean, they cannot force any of these governments to solve the crisis immediately. So just accept some euphoric rally rather than any major upside in any of the asset class. So I think that's a non-event. I think more focus should be on FOMC because the world is interested whether the QE is coming or not coming. That's where the whole focus is rather than the demand is coming or not.
Okay. One last question before we let you go, Kunal, is while you are bearish on the crude prices, clearly you see them going down by 2012 end. Which other commodity do you think could be on the buying side of your radar?
I think on international commodity, gas remains my favorite pick for the year. And if you talk about the agriculture commodity, I think soybean is one of the one I bet on.